Broadcasting from the 72nd floor of First Canadian Place in the heart of Toronto's financial district, this is #Finance, the podcast that profiles innovative entrepreneurs and thought leaders operating in the public markets. Presented to you by the CSE, the Exchange for Entrepreneurs.
Folks, thanks for watching or listening to #Finance. It's James Black. We're at the 72nd floor of First Canadian Place and pleased to be joined by Frank Holmes, returning again as a guest on the podcast. Frank, how you doing? How are things? How is PDAC?
It's outstanding. The fact that I'm alive and thriving. I turned 65 last week, so yes, I'm blowing and going, as they say.
Happy birthday.
Thank you. But I think the PDAC, and I'll tell you about my BMO experience.
Sure, yeah.
Because lots of happening in the mining world.
Yeah, lots happening. And maybe just as for the listeners, just to set up real quick, if you don't know Frank, maybe just give us 30 seconds on Frank Holmes. And then what we'll use this podcast and this discussion for is an opportunity to again, take a deep breath and try to decompress from PDAC, the world's biggest mining conference, and you mentioned the BMO conference too. We probably learned a few things over the last week. So first, just reintroduce people to who Frank Holmes is, and then we'll jump into the fray.
I am the Chief Investment Officer and CEO of U.S. Global Investors, which has participated in the creation of many mining companies, and also the first blockchain company to come into Canada that brought in a whole $1 billion from the U.S. investing in it. Yeah. But I'm from Toronto. I'm a Texcan, they say. Y'all come back, eh? I've been living in Texas for 30 years, and I come back and forth to the beautiful country of Canada.
It is beautiful, even though it snows. And we had a nice dump last week. It's not beautiful. That's Toronto for you. PDAC. So most people listening probably know what PDAC is, but it's a huge resource show. It's got a huge investment component. Tens of thousands of people. Well, maybe this year just 20,000 people, I think, by my rough count. But they came to Toronto. They went to the conference center, and they were listening to people such as yourself and other experts in the space to learn more about gold and other resource and metals and minerals for investment purposes. And leading into the show, we saw a real, momentum, a real energy behind gold and precious metals, obviously because of what's happening in the world with the coronavirus potentially and with what's happening on China as a result. But from your perspective, after this show, do you think all the excitement behind gold was warranted? Is it going to hold, or did we get a bit of a depression after that? Did people feel a little less excited after the show because of what we saw?
I don't think there's any depression over buying the commodity.
Right.
I think the concern is, and it's just all math, looking back, are stocks. So the great bull market of junior mining to developers to big producers of 2001 to 2007, you had rising commodities, but you also had rising stocks. And that's when the stocks really perform exceptionally well. And after 2008, we had the gold go from 700 up to 1,200, then corrected, then went up to 1,900. Yeah. And ever since then, all the regulations, et cetera, have been very difficult on the gold mining industry or mining period. And two is that the captains of the mining industry did a lot of deals just to grow the top line, not on a per share basis. So they sort of hurt themselves. And what I see from PDAC and I saw from BMO, they're much more conservative and cautious. So even though we're seeing gold rally, and everyone talked about, especially Robert Freeland said, who last year would have forecast palladium to go from $12,000 to $2,700, or rhodium from $1,700 to $13,000. Yeah. So why can't gold go to $2,700? And why can't? And I've been saying, why can't it go to $10,000 with the amount of money being printed? So there is a lot of interest in the underlying commodity because of the money printing and also peak supply.
Peak supply is, and we're there, or we're getting there, or it's behind us?
We're there in gold. And I think Mark Bristol did a great job from the CEO of Barrick, speaking at BMO conference, highlighted that it is there, and they just have to basically make sure they can maintain their production. It's very hard to move the dial to increase it dramatically. And I think that we're going to, and the other big explanation was, look at palladium. After about 3 to 4 years of shrinking supply, all of a sudden you get this mega run that's taking place in the palladium.
How does that happen though? People they're not forecasting demand for the end products, or what?
They dismiss it.
Right. Okay.
They just dismiss it. And
people have been dismissing electric cars for so long now that they're finally realizing, oh my God, we're going to need all these precious metals and
absolutely.
Yeah.
So it's real until there's all of a sudden the demand just all of a sudden starts getting these spikes, and everyone wonders what was taking place. So I think there's no frackers around. And there was peak oil until the frackers came along.
Right.
And there's no real technological breakthrough except for a little company called Goldspot that's doing AI that Yamana said helped them have discoveries. And what it really does is de-risk exploration spending.
Yeah.
So rather than spending $10 million, it can prioritize and de-risk it that you only have to spend $2 to $3 million to see if you're going to get this positive outcome. But there's nothing. Only Superman can see through the ground, and he has problems with lead. Yeah. So there's no technological breakthrough, and this is really important to realize. There's technological breakthroughs on batteries. There's technological breakthroughs on driving autonomous cars using AI.
Yeah.
But they need metals.
Yeah, and I mean, we had a company present called EnviroLeach, which is innovating in then how you leach out metals from e-waste and other ore bodies, and that was one that got me excited, saying, you can now make it more feasible to take lower yield tonnage, and perhaps leach it out in a more effective manner, not use cyanide, more environmentally friendly. But the way that Dwayne Nelson describes his technology, it's the first innovation, meaningful innovation in his space since 1870 or something crazy. It's like not a fast moving industry when it comes to technology. But now your experience in technology, I just want to relay what you've done with Hive and Ethereum mining and related to gold. So again, talking about a higher gold price, people are going to start looking at perhaps that's being driven as a store of value in the macro circumstance that we're seeing with coronavirus. Do you see any, A, do you agree with that? But B, is Ethereum going to be, or crypto like Bitcoin, going to be another store of value in a world that's fastly becoming more volatile, a little scarier because people don't know how to peg what Corona is going to do to this entire economy, its global economy?
What I look at, my opinion, Bitcoin is going to become an art collection.
Okay.
And so if you had Andy Warhol prints, the original prints for Mao, they came out at $1,000. They went to 10,000, went to 25,000, fell back to 10, went up to 50, fell back, and then went to $250,000.
Yeah.
So there's a limited supply. It's and especially if they're what they're called Genesis or Virgin coins, they're going to become more valuable, and that's where I think they're going to become the sort of the digital world collector's item. Robert Friedland had a great visual showing cars. And in the visual was a picture of nothing but horse buggies, but one car. And 7 years later, the picture on Fifth Avenue was all cars and one horse buggy.
Yeah.
And so there's a tipping point that all of a sudden people wake up to. The price of copper has got to trade much higher. The price of gold has got to trade much higher. And with all this funny money being printed, governments go and issue, $30 billion and no one buys it, so they buy it themselves, and now they go and buy Apple. The Swiss are one of the largest shareholders of Apple Computer, and they're buying it because they get a dividend. They own Microsoft. So they basically float money at a negative rate. It's unbelievable. But what's happened is that the G7 countries and now the G20 are a cartel.
Yeah.
And they're like an OPEC cartel. And they can all collectively print money and say that we have to do it to save the world. Not from green, but we have to save the world for the economy. So they all help each other out, print all this money, and it's the first mover advantage to real assets.
Right. Now, so if owning gold in as close to physical form as you can is a, hedge against inflation, which is kind of what you're mentioning here, is just print money. Does it correlate with holding crypto? Do you see the two acting similarly in a portfolio?
They do. I launched Hive blockchain because I couldn't launch an ETF.
Wow.
I had all this knowledge going, and basically AML concerns superseded any launching of a product, both in the U.S. or Canada. And so the idea of mining a virgin coin appealed to me, that it would give me no AML risks.
Right.
You know, I don't have that issue, and so that's why I went into that field. I never expected would all of a sudden see $1 billion come in to create 30 other companies emulating that model. And then you had this sort of hyperbolic run up like you did with 1999 with eyeballs for internet, and then you have this incredible crash. And then out comes, from the internet boom, was Google. It didn't come at the beginning. There was Yahoo. And
none of the big ones other than Amazon are really kicking around anymore.
And so you're going to have the same thing in the crypto space. So I think that Bitcoin is going to become a collector's item, but I think Ethereum is going to become the protocol that is used, and we're seeing that with all the alternative coins or ICOs or other countries, India, China, they all are using that algorithm. So I think Ethereum, because of the smart contract.
It's got more utility than Bitcoin across different applications for sure.
And do you understand how it works?
I want you to tell our audience how it works because I probably have a misguided understanding of it at this point.
It's confusing.
Yeah.
And I'll tell you, it took me a lot trying to scratch my head to understand a metaphor. So the simplest metaphor is think of a safety deposit box.
Yeah.
And you have that little dial. And you've got to go back and forth to remember 3 numbers.
Yep.
And when it comes to unlock what's inside that safety deposit box, when it comes to Bitcoin or Ethereum, it's 64 digits. You don't have to unlock 3. You have to unlock 64. And it's like an Olympic race that who first unlocks it and locks it up gets a new coin free.
That's right.
So
but it takes a lot of computing power to do that.
It does, and also good algorithms. So what happens, you stack these computers. And so what people to understand is that what's inside the safe, that transaction between you and I, nobody knows.
Yeah.
But they know where the safe has been, in an open ledger. And you have all these people around the world that are validating there's been no hacking of that safety deposit box. It's safe. And so they get stacked on top of each other.
Yeah.
And you know if it's been to a dark pool. You know if it's been into a dangerous place. So they automatically, with new software, get thrown out. And that's why I like mining the Genesis coin, the Virgin coin, because I don't have to worry about that risk. But when you come to Bitcoin, it's basically an economic transaction between 2 parties that's locked in. But when it comes to Ethereum, it's data, like your insurance, your mortgage contract. It has all these other types of digital contracts that can be put in there, or the reps and warranties for a credit default swap.
Or a security, like a stock.
Correct.
Yes, which we've been thinking about here at the exchange.
So you don't know what's inside, but you know that where the transactions have taken place, and that's what makes it unique and special. But Ethereum is much faster at processing than Bitcoin. Bitcoin Cash is faster than Bitcoin, but basically Ethereum is just a more resilient algorithm, and it has 30,000 scientists around the world and 10,000 basically nodes validating.
Yeah, I know it's huge, and it's got you talk about speed. I mean, with Bitcoin, I mean, to have that immutable ledger, that data, it kind of collects moss as it goes along. It gets heavier as it moves through the system, and I think that's been one of the challenges with crypto and some of these blockchain protocols is that, if you want to have all that transparency in data, it's not like changing hands with cash. My pocket's now $10 lighter when I give you my $10 bill. I've given you that token, or that's crypto security, and it's got the history of everything that's happened before, and it carries that along the path. And I think that, to my understanding, that's a computing challenge of these securities, or these.
The bigger part is the credit default swaps.
Okay.
So it was calculated. I was in Switzerland at a finance event for crypto and blockchain that had all the credit defaults been on blockchain, that the Federal Reserve could have written the check for the problem, and it was $8 billion. But they were worried there was $400 billion. So no one knew.
Yeah, well, that's.
But if it had been in an open ledger, they would have known the parties in between, but they would have known where it's been. They could have added up the net value of these in the seconds. It would never have been. We would never have that crisis.
Right. Well, we don't know how much gold is in Fort Knox, so who knows who's holding what, really.
Well, based on what's in Fort Knox, Indian women wear 6 times the gold on their bodies, and it's protected them from all governments and bad policies.
Yeah. Well, good luck bringing that all into one spot if you ever needed it, I guess. But let's talk about PDAC for a sec. So, again, the reason I come back to it is because we spent a lot of time at the show. We spent a lot of time getting people ready for the show. And when I went to the show, and I was there for most of it, I noticed that my foot traffic that I saw at my booth and at the show, and it seemed a lot lighter than I expected. And I think what I didn't see there was the retail investor. So usually when you put up pens at a table, if there's a big retail show up at the event, those pens disappear. This year was hand sanitizers with our logo on it. But this is. I want to ask this.
Little canned food.
I already went. I got mine, but seriously, like if we gave that out, maybe we would have seen a few more fly off. But I don't think the retail crowd was there, is what I'm trying to say. And I'm trying to understand if that matters anymore. Like, are they just getting their information online? I know you write a newsletter. To me, the show felt like more of like an industry gathering. It was me running into people at my clients and stuff like that.
I think it's coronavirus.
Yeah. Okay. Yeah.
I think at the BMO conference, it came out that some of the major mining companies didn't show.
Yeah. There's empty booths, doubles,
and so they had a jockey around who's speaking.
Yeah.
Everyone was enthusiastic about the commodity prices, except for basic copper. But I think that the retail component is very fearful, and smart investors like Eric Sprott, etc. You know, he's off in the Bahamas in his island and wants to wait till it's all quiet on the Western Front, and so that's really Robbie Kuhn at this event also expressed it. Now I'm a member of YPO. And YPO is Young Presidents Organization. And there's about 25,000 members around the world. Yeah. But they represent 10% of the world's GDP.
The people do in the group.
That group.
Okay, yeah.
And so they canceled their big shindig every year, and this year was supposed to be in San Diego. It wasn't in Singapore. It wasn't Hong Kong. It was in San Diego, and they had lots of concerns from around the world. Now, that took place last week, and so that was a telling sign. And then the whole drama in the U.S. when Trump first canceled flights coming from China into the U.S., Milley's a racist. No, their reconnaissance was fastest to do it. And it's interesting for me because the sort of socialist policy of open borders in Europe, they're having much bigger problems.
Well, that's been an issue with immigration, and now it's
now it has a coronavirus.
Yeah.
So you have to have better checks and balances. So we worry in Texas about drug lords coming across easily. We worry about the caravan of people being used as mules. If they don't carry drugs across, then they have to pay a big bounty to be able to get across. Yeah. So there has to be checks and balances, and so the coronavirus, it doesn't care about your race, your religion, your gender. It doesn't care. It's just going to kill you. And so it's recognizing that we have to have better checks and balances across borders. And Brexit was over this. It wasn't a coronavirus, but it was bad socialist policies for young people in Spain, Italy, and France. You can't get a job if you're under 25. You can be an engineer. So what would you do? You went to England. Yeah. England's system could handle 500,000 people a year. 2 million are coming in. Their health care, nothing can really support it. And the regulations kept coming in from the EU. So it was saying we need to have checks and balances. So I think, my opinion, that the coronavirus is going to be a sea change like the TSA was created after 9/11. That we're going to see this sort of greater discipline of checks and balances of people coming to the country, where you've been. There's going to be a lot of money spent on technology to be able to read you. Do you know AI now can read how you walk? So not only your eyes, your fingerprints. I noticed when I was flying recently in Delta Airlines that you just had to use your face and it was identifying you in your seat. And so it's being tested like your iPhone does facial recognition. It's now pretty good with facial. So when these rioters turn around and wear facial stuff, etc., masks, don't worry. They can tell by your walk now, and it's now only 80% success, but that's a pretty high number. So I think that we're going to see more checks and balances like this to protect societies, because the number one word of people investing is, are you safe? Yes, you want to speculate.
Yeah.
But are you safe from being cheated? Are you safe from fraud? Are you safe from a whole host of events? That's what people want to do when they walk in the streets. They want to feel safe.
Well, they want to have into the economics of it all. I mean, look what happened to the market. It went crazy down last week, and then back up another record day. Because
that's money printing.
And the volatility is not good for our economic safety. It's a risk to the system. And while some of us do well when it happens, it doesn't engender or create confidence in the system.
You're correct. Yeah. Absolutely.
And that's a problem. So let's take a couple more points here to share with our audience. You went to these great conferences. I'll say, maybe not ironically, maybe this is just time and what happened over the last month. I was in Davos, Switzerland during the WEF. And not 3 weeks later, Switzerland called off all events over 1,000 people. So I wonder if they nudged that one in there before, because who's not going to know that that's something they got to avoid, right? The corona. But let's you mentioned,
but they didn't have good data. That was the whole thing of the data coming out of China. Was it totally complete? And in Italy was a complete disarray this morning.
Sure.
The health minister says that there's no problems, and the head of education comes out and says we're shutting down all schools and universities. So you want to talk about dysfunctional socialist country? Yeah. There you go.
Japan seems to be the most on it, as far as I can tell, from a public policy standpoint. And it wouldn't surprise me. They seem like they're a pretty organized bunch. But again, so you're mentioning you pegged a gold price at $2,700, maybe $10,000. This is just a general question. Why are you guys always trying to outdo each other on the gold projection? Isn't 2,000 good enough? Can we just get there first and then decide if we're going to get to 10,000? Because we're always sitting around. We've been pretty kind of stable price for a while. Do you really think it's going to get there?
It's because guys like you ask. Right? What's the weather going to be? What is the first thing most people do in the morning? They check what the weather's going to be outside.
Yeah.
So when it comes to investing, people are always trying to predict.
Yeah.
And so I don't mind saying, why can't it be? Like, I'm not saying it's going to happen on this day, at this day. No, I don't do that. But I've never witnessed where governments, like in Denmark, were paying you to take out a mortgage.
So so what you're saying is there's clearly identifiable themes happening right now that are unique to this time and place, this era, that could contribute to your projection.
Yes, because the money printing. Yeah. And gold is highly correlated to negative real interest rates. So if you took the aggregation of the G20 countries and you look at all their bonds that are floating in that world, and you look back and say they're negative rates, and it's for your listeners, it's the government's trying to seduce you to buy their bond. Their 2-year bond is paying you 1%, but inflation's running at 2.7. Guess what? I'm going to lose 1.7 for 2 years. I'm not going to buy that. So the government turns around and says, don't worry, our central bank will buy it, and then they'll take that money and they'll go buy dividend-paying stocks. So what's unprecedented is the Swiss government is not buying gold. They're not buying gold.
Okay, what they buy?
Cadbury's, Nestle's.
Microsoft. They pay the dividend.
They pay dividends, and the dividends higher than they're able to print this funny money.
Yeah.
And so there's like collusion between all these central banks, rather than have fiscal discipline of deregulation and simplifying things. No, they're just going to use funny money.
Okay.
And so the smarter people are running out there to say, how do I get in and buy dividend-paying stocks and have a growth profile like REITs?
Yeah.
Utilities, when 2008, 2009 crash took place, what stocks perform best? Those that have the ability to always, you need it. You need electricity for the lights today.
Yep.
And so those utilities become very valuable. And so I think that there's a big paradigm shift that's taken place. And the other big one is sort of the pushback, and I don't believe it was Trump that started it. I believe it was Modi in India.
Yeah.
If you look at a tough guy coming in, I mean, how many tens of thousands of people lost their life when he reversed the currency, basically, took away all the cheap paper money, came out with new ones, and if you didn't turn it in, your paper money's worth nothing, basically, to try to catch cheats. Well, that's pretty strong. And then you have China ushers in a tough guy. We already had Erdogan in Turkey. We have Putin. And the free markets and democracies are all of a sudden coming in to elect a Trump.
Yeah.
They're bringing in to say, we need something that's going to be a strong. So something's happening. It's happened in Poland. It's happened in Hungary. It's happened in several of the Eastern European countries. So it's recognizing, what does that mean? How do I make money with it? How do I protect my money? As Warren Buffett says, rule number one is not lose your money. Rule number two is rule number one. All right, and then you look at how can I make money. So I think it's important for investors to recognize that there's a sea change. What two countries dominate trade? China and America. They're 40% of global trade.
Yes.
They get into a spat. What do you think that does? All right, it starts creating this rippling effect. So you really don't have to, and I write about this, government policies are a precursor to change, both fiscal and monetary policies.
Yeah.
So monetary policies are zero interest rates, negative interest rates to try to stimulate growth, unprecedented. And then fiscal policy is more regulations to try to control societies. So you have those two factors. Now comes in, where do you make money with that?
Yeah. So, and I'll leave on this note because I want people to take, you're not going to learn everything from Frank Holmes through this podcast, I'm sorry, but you do write a newsletter. You are a frequent speaker on the, everywhere it seems like, but where should people connect with you to get more information and connect to your newsletter?
usfunds.com. That's simple, usfunds.com. It's called Frank Talk.
Yeah.
And the Investor Alert, which my team and myself publish every Friday night, and it goes out to, I think, 50,000 people in 160 countries or something.
Wow. And you will get smarter by reading it, right?
I try to make things simpler because you won't believe how hard it was for me to understand blockchain and distill it down.
Yeah.
And the last thing I'll share with the blockchain, young guys like you, I never knew about Tinder. So my godson is showing, well, look, Frank, what do you think of her? And I said, well, how do you know she's real? And I couldn't believe he trusted what she was sending to him. Yes, no, yes, no, yes, no. And then Airbnb, it took me a long time to trust it. It took me a long time to trust Uber.
It took a long time for people to trust putting their credit card on the internet or on the web. And we do it just by pointing our phone at stuff now.
And now China, 65% is all basically using the WeChat format, and it's all using your phone to buy everything. No credit cards, no cash. Yeah. So the digital world is there, it's real, and I think it's all part of a new element of trust.
Trust as long as someone is getting your data and they can use it somewhere else.
Absolutely.
And that's a different conversation for a different day. Well, thank you, Frank, for coming. Thank you for watching. It's CSE TV. Down below, subscribe if you're watching. If you're listening on #finance, you're probably listening on Spotify, Google, SoundCloud, any of those channels. Please subscribe. We have great guests like Frank, now on for a second time. Thank you again for coming, and thank you again for watching and listening. Thanks.
Thank you. And I see you're married, so you don't have Tinder.